would basically boost results in the times to come. So Hang Seng today is in the positive at 1.42%. Nikkei, however, is in the red at minus 0.15%.
All right, and among other global cues, Brent crude is back above $80 a barrel, and this is on the back of a bigger than expected US crude storage withdrawal and a drop in US crude output. Also adding to the rally in crude is the Chinese economic stimulus. Remember, we have been hearing reports of a $278 billion stimulus package that is being in the works for the stock exchanges of China, and the idea is that they'll bring in offshore money to bring that support to the local economy over there as well, the local stock markets, which have, by the way, taken a beating in the last 1 year or so. Talking about the dollar has also slipped and it's near its year-to-date lows. That is taking a breather from its recent gains, and investors are perhaps consolidating their positions and looking at the economic data that is to come out this week, as well as Federal Reserve policy meeting that is scheduled for next week for more clues as to the start of the rate easing cycle. The dollar index currently, as we speak, is hovering at the 102.3.25 sort of levels. Interestingly, the US 10-year yields have picked up and usually they move together. The dollar index as well as the yields, they move in the same direction, but this was not the case overnight. The dollar index slipped, whereas the yields, they moved higher by about a few basis points. And the last time I checked, 10-year US Treasury yields were at the 4.2% mark. Back home, we have had another muted start to the trading session, and Nifty opened about at 21,450 mark. Remember, today is the last trading session for the week because tomorrow is a holiday on account of Republic Day, and it's also the FNO expiry, the monthly expiry for Nifty contract as well. And the markets have in fact slipped below 21,400 levels. Now the markets are extremely choppy, as has been the case in the last few sessions. At 9:30 they were above 21,400, but as we are speaking, the market is very much close to the day's low. Nifty is down about 0.4% below the 21,400 mark. But to discuss what's going on with the market and understand the way forward, let's also bring on board Mr. Akshay Bhagwat, Senior Vice President of Derivatives Research at JM Financial. Akshay, thank you for joining us here on News9. I want to begin by asking your assessment of market. A percent here, a percent there. We have seen a strong recovery in the last session of about 300 points, but the markets have been extremely choppy. So what's your view on Nifty, and can we perhaps, stay above that 21,000 mark?
Good morning, Suyash. Well, if you look at the Nifty index, the January series has lived much to its expectations. Historically, as I mentioned before, January is a month where there is always a high probability of some corrective action. And after the blasting move which you had in the month of November, December, a cool-off of momentum was much needed ahead of the budget. Now, really, are we out of the woods or not is the question. Still, the pain can be there in the index because, a couple of days back, we had some technical breakdowns of the Nifty, which was coupled with short additions. Even if you look at the rollover data till yesterday, there was rollover of short bets to the tune of around 65% in the Nifty index. So technically, for some kind of stability to regain, I would look for level of 21,700 at least to stabilize above that. Otherwise, it's just a dead cat bounce, which I look forward to as we had yesterday. And still the downside target still 20,800. This is the possible downside I look forward to as we move into the February series. So that downside is still on. Supports are not yet tested, and it's too early to make an evidence that a possible bottom is under formation. So yes, it's choppy, it's on a slippery turf, and you can see some more selling pressure as we move into the February series.
All right, some more selling pressure expected, and reversal is only expected around the 21,700 mark. once the index takes that over. But let's also talk about Nifty Bank, because I was looking at the price charts yesterday. We have in fact corrected about 3,500 points or so from the peak. But I think on the price charts, it looks like we are in the oversold territory. RSI, the relative strength index, at one point was near in the 20s. So can we expect a pullback from here on?
Well, if you look at Bank Nifty and Nifty charts, clearly Bank Nifty has been a laggard here. And for any kind of strength in the broader market structure, it's always, if you look at Bank Nifty takes the lead. Technically, although as you mentioned that it's near an oversold zone, yes it is, but the momentum in Bank Nifty is still positioned on the negative side. So there are short build-ups in the futures and options segment, a lot of call writing which is present around 46,000 as we move into the new series. Short positions have been rolled, and there may be one more leg of downside where you might see Bank Nifty hitting the 44,000 mark. So 44,000 is a very important level for me. That is the area where if it gets to, I will search for some bottom fishing opportunities. As of now, the trend is weak. Yes, there will be some dead cat bounces here and there, but still one should not be too excited to jump the gun and buy Bank Nifty. At least a minimum 46,000 level. That's pretty far from where we are, but that's, if it crosses that level, it sustains above it, that will be the first sign of stability getting back into the bank system. As of now, most of the bank names are weak. HDFC Bank has obviously led this entire mayhem, and we expect the downside further to aggravate as we move into the February series.
Good morning, Akshay. I'll drive your attention to Tata Steel, which announced their Q3 results. And steel companies in general have experienced gains because of a surge in steel prices due to robust demand from substantial infrastructure projects. This has obviously been counterbalanced by an increase in cost of coking coal. Tata Steel has announced a marginal decline in revenue of around 3%, but their profits have jumped back into the black, and they have recorded profits after recording losses the previous year, same quarter the previous year. When I look at the stock today, it is down marginally. What do you make of Tata Steel stock per se for the investors? And steel stocks in general too.
Yeah, good morning, Amit. Broadly, if you look the way the prices have reacted to the results, it's been more like a non-event. Really, markets are not drawing any conclusions from the result as the price movement goes right now. And even if you look at the past 3-4 weeks of trading in Tata Steel, it's more or less, plus minus 5 odd points from the 135 odd mark where we currently trade. So yes, from a broader structure as an investor, yes, the trend is still not disturbed. The support area of 130 here would hold special relevance if you are an investor or you are positioned yourself for the medium term, because till 130 holds in Tata Steel, the trend is strong. It might have its moments where it might be a bit choppy, but still there is room for Tata Steel to aim for the recent swing high till 140. That's the immediate target if you're a short-term trader, and the probability of hitting those look high. Maybe it might do it today, or maybe as we move into the February series. But I will be positioned in Tata Steel still on the buy side of trade, 140 to 145. These are the couple of targets I would be working with on the long side in Tata Steel.
All right, that's a view on Tata Steel. Another company that came out with its numbers was Bajaj Auto, and a very healthy set of numbers, with the numbers, at least the results beating streets expectations across all parameters. Net profit, that figure surpassed the 2,000 crore mark for the very first time. And talking about the stock, phenomenal set returns and phenomenal wealth creation for investors over the past year. I think it's almost a multi-bagger at this point on a 12-month basis. So the question is simple: can this rally sustain or continue?
Yes, Bajaj Auto definitely has been a multi-bagger. 2023-2024 has been one of the finest price moves which Bajaj Auto has recorded. And if you look at the last few trading sessions, it's been in a range, 7,000 being the base, which is slowly setting up. Technically very firm, a bit overbought for comfort, but still, this momentum is intact in the stock. Numbers are good, though the reaction is a bit tepid here. But I believe the stock has still one more leg of upside left. left, and possibly 7600 is where this stock should be aiming for. So yes, as an investor, you continue to hold on. There are no reversal signs as yet. As a trader, maybe it's in the last run of momentum is still on, and you might get this soon as we move into the February series. So 76 is the target I would look forward to. 7100 is the support area, and you have stops below your support and ride for the next round of momentum where you might see Bajaj Auto heading for 7600.
Okay, Akshay, apart from this, what are your picks for investors today?
Well, if you're a short-term investor, I have a couple of trades. Majority of them are on the buy side because still my belief is that stocks the momentum is there to be chased in most of the stocks. So here Maruti, which has been an underperformer in the auto space, I believe that this might be the next stock from the auto space which has underperformed till now in terms of price action. Now this might be the one or the dark horse out of the entire auto pack. I believe there will be a possible reversal in Maruti. So you buy Maruti at the current rate. Technicals and derivative parameters are hinting for a reversal. Target area is which I look forward to is 10,275 and stop loss will be 9782. Second trade is Motherson Sumi, a very strong technical setup. Yesterday was a fabulous day for Motherson Sumi. Strong long additions for February. Good price structure for the current short-term moment, riding the momentum. Easily 118 is the target which I would look forward to with a stop loss of 105. And the last recommendation is from the IT space, which is Emphasis. A strong chart structure, a slight consolidation, giving a re-entry near the support area. Long additions. February series is looking good as the IT play will continue. That's my belief. So Emphasis is a buy. Target 2645 with a stop loss of 2507.
All right, those are the top stock picks from Akshay Bhagwat. Akshay, always a pleasure speaking to you. Thank you for joining us here on News9. But with that, let's take a short break. On the other side, we'll be back with the results of JSW Steel that are expected to come out, and Mr. Gaurang Shah also joins us.
Since the last 2 years, Khalistani terror groups are threatening Indian diplomats in Canada, US, UK and Australia. Investigations of these threats led us to the first ever abduction and killing of an Indian diplomat, Ravindra Matre, in UK's Birmingham in 1984. Our months-long investigation finally led us to the murderer of Ravindra Matre, who has been hiding in Pakistan-occupied Kashmir for the last 40 years. Watch our exclusive documentary, Murder of an Indian Diplomat, where we reveal the man who killed Ravindra Matre.
Stop searching, start streaming. Download the world's first news OTT, News9 Plus, ahead of the curve.
Bangalore traffic is an example of something that has gone wrong with our system.
We have more than 50 flyovers in Bangalore city. If flyover is a solution to traffic problem, Bangalore should not have traffic problem.
According to TomTom Traffic Index 2022, Bangalore is ranked as the second worst city in the world when it comes to traffic.
The speed limit at the ORR is 80 kilometers per hour, but our vehicle has only moved 10 kilometers per hour.
What Bangalore needs is a surgery, but what we have been offered repeatedly are band-aids.
Only on the world's first news OTT, News9 Plus, ahead of the curve.
It was my 14th birthday.
On birthday, daughter waits
Home missing father.
He was carrying a cake for his daughter.
49-year-old Birmingham-based
Indian diplomat vanishes.
He was grabbed and bundled into a car by 4 assailants.
KLA claims responsibility, demands Kashmiri separatists.
Makbul Bhatt's release.
Goli maro. or Bangalore.
And within 3 days, they shot him dead.
Abducted diplomat.
Found murdered in Leicestershire.
I said, who ordered to kill him? To me, he said, yes, I ordered it.
And he never came home.
Stop searching, start streaming. Download the world's first news OTT, News9 Plus, ahead of the curve.
Welcome back. You're watching First Stick here on News9, and Indian markets now, they are feeling the heat this Friday morning. It's the FNO monthly expiry for the January series as well as the last trading session for the week, and Nifty as we speak has fallen below the 21,400 mark, and we are about 0.4% down at 21,373 as of 10 a.m. this morning. But Amit, I was looking at the price charts, and the entire rally from October to the peak, somewhere in mid January, we are at the 23.6% retracement level, which somewhere falls around 21,347 mark, and that is pretty much where the day's low is at. So that becomes a very crucial support for us in the midterm. So perhaps for today's expiry, 21,343 should be keenly eyed, because that could lead to a further selling pressure and could lead to us testing the daily lows of the last couple of trading sessions. But looking back at the markets, Sensex has also slipped by about 0.5% or so as of 10 a.m. this morning. It's below the 71,000 mark, 300 points below it in fact. And the mid cap and the small cap indices, now they are also they are pretty choppy this morning, but as of 10 a.m. this morning, they are both in the green. The mid cap index is holding above the 47,400 mark, whereas the small cap index, that has been the best performing segment for the market, and it's up about 0.5% above the 15,400 mark. Volatility, now that is going to be a problem, but the kind of movements, wild movements that we have seen in the past 4 days, a 15 sort of level is something that the market won't pay much attention to, because we have seen 15 on India VIX, but then by the days end we have seen a slip to 12 levels and a spike to 15 again. So India VIX as of 10 a.m. is above 4% higher, above the 15 mark. But to understand what's going on with the markets and what should be your trading strategy for the medium to short term, let's also bring on board Mr. Gaurang Shah, Senior Vice President at Geojit Financial Services. Gaurang, thank you for joining us here on News9. I want to ask you about your assessment of the market, because a lot has happened since we spoke last. The market has rallied by about 500-600 points. I'm talking about Nifty here. Then we have given up all that we made, but we saw a bounce back yesterday again. So what should be the strategy for the medium term? Should we buy these dips, or perhaps there is some major correction in the offing?
Thank you, Suyash, for having me on the show, and morning to all of you all. So, I think the high on the Nifty was 22,200 or thereabouts. And then currently we are at 21,375. Similarly on the Sensex, and similarly on the Bank Nifty or Nifty Bank. Stock specific, depending upon the numbers that the companies have delivered, you might see a little bit of more pain. Case in point, HDFC Bank, and likewise some other names. Whether you should, first, what you should do to answer your question, first question. Well, I think selective buying in a phased out manner is a very disciplined approach in the stock market. And this is applicable to both, whether you are doing direct equity investing or whether you are doing your SIP mode via mutual fund. So continue that. I don't think if you were in love with the Indian markets at 22,000 plus, I don't think you have any reasons to complain at 21,300 or 21,400. Saying third point, 21,300 to 21,500 was a huge consolidation zone. Last year, I think it was second half, June, July, August or something like that.
Right.
We spent almost about more than a month time oscillating between 21,300 and 21,500. And eventually we broke that 21,500 and we've seen the all-time high that we've seen. So what I understand, excuse me, what I understand is that to break 21,300 decisively and give a close below that, that looks a little bit, wishful thinking. And even intraday, you might break those levels, Suresh, no doubt about it. But closing is important.
Right.
40, 50 points plus minus from these levels, you can take it with a pinch of salt. My belief is that F&O expiry will keep the market choppy today. Tomorrow we are on off. We get back to work next week. And of course, we'll be discussing the budget as well, because that's going to be a budget week, if I'm not mistaken. And the anticipation and what the finance minister has delivered and how do we dissect and understand the fine prints and the policies that are laid forward in front of us. I don't think you should stay away. I think selective buying, disciplined buying in a phased out manner has always been rewarding in the stock market.
All right, selective buying is always rewarding. So what will be the sectors that you will be adding in this correction if we see a major correction from here on also?
So I think there are 7 universes that we look at primarily, Suraj. Starting with banking and finance, both private as well as public sector banks, selective where we have coverage. IT has done decent in terms of numbers. Some mid-cap names have kind of disappointed, but I don't think those numbers are as bad as you can paint the entire mid-cap IT universe with a red brush. I think there is still optimism over there. Autos would be the third sector that I would look at. Defense-related plays are still something that is on the buy side as far as Geojit Financial Services is concerned. Some select stocks in the power generation, transmission, utilities, equipments, and of course select railway-related stocks. Broadly, this is going to be the universe. And if I have to add 1 or 2 more names in sectorially, I think cement and metals is something that our eyes will be definitely focused on. And my understanding, Suyash, is that start with large cap and then label into some mid caps, small cap, micro cap. I think we will still give it a wait and watch. But yeah, company specific, sector specific, you can definitely look at the small cap business.
And one of the sectors that you mentioned, the metal pack, we had Tata Steel that came out with its numbers yesterday. JSW Steel is also expected to come out with the numbers. I'll get to you in just a bit. But Amit, what are the key expectations from JSW Steel this time around?
Tata Steel swung back into black. JSW, the expectation is that quarter on quarter there will be a 45% decline in net profits. The calculation for year on year is not applicable because they were in losses the same quarter last year. The company is expected to post a net profit of 3,556 crores for the quarter gone by. The net sales are also projected to at 44,799 crores, down 1.8% quarter on quarter. So that is also going to go. Mostly their orders have gone down, and also the operating cost because of the increased price of coking coal has affected them. Their EBITDA per ton is likely to decrease 14% quarter on quarter to 11,000 rupees per ton for the quarter gone by. The coking coal impact is estimated to be around $30 per ton for JSW Steel's India operations. Moreover, the expectations for the top line growth, as mentioned, is expected to be relatively flat. When I look at the stock today also, JSW Steel, it is down marginally 0.38%. Gaurang, when we come to the steel stocks, whether it is Tata Steel, that is also just marginally up and down in the last 1 week, or even if we look at the last 1 month. Same is the story with JSW Steel. Now I'm looking at Jindal Steel also. That is also marginally up 0.5%. But if you look at the seen the last 1 week or so, it has been either up or down. No major gains. Same is the story with steel, which has gained a little bit more. But what do you make of steel stocks and JSW in particular?
So, first of all, Amit, let me highlight the coverage universe as far as Geojit Financial Services is concerned. In the entire ferrous, non-ferrous pack, positive on both the names that you spoke about, JSW Steel and Tata Steel, followed by Hindalco, Vedanta, and JSPL. The problem with the entire metal sector is not only locally but globally as well. And of course, the great news flow that comes out from China and the fluctuation in the commodity market. Given the domestic, backdrop, we remain optimistic because we are of an understanding that infrastructure building activity, which is kicked by the government at center and at state levels, by respect to state governments, is going to continue, and that is going to have a decent uptick in terms of demand for both cement as well as metals. Input cost over the last couple of quarters, if you go to see, has come down to a certain extent, barring one or two commodities, which is an integral part of that input cost. Pricing factor as far as flat and long products are concerned, we believe slowly, gradually we'll see an uptick as the demand picks up. But it is not that you will see a major turnaround immediately in the short to medium term for the metal pack. You need to have patience if you are selecting metals as a universe to invest in, and you need to have a very longish time frame compared to the other sectors like maybe banking or FMCG or autos. When it comes to metals, you need to have at least double the time horizon. For example, say for the other sectors, you have a time horizon of maybe about a year and a half. Then if you're investing in metal, you need at least 2.5 year plus kind of time horizon for a meaningful turnaround in terms of numbers and thereby reflecting upon the prices.
All right, and Gaurang, before we let you go, FMCG is one of the sectors that I want to talk about, and especially in regards to the interim budget. Do you expect government to do anything to, resurrect that rural demand that has been missing in this interim budget?
So I think it's going to be a policy which has been delivered over the last many years. I don't think this government is going to do anything populistic. Wisdom has always prevailed upon this government, and of course, the Honorable Finance Minister, Srimati Nirmala Sitharamanji. And I think they will do justice even this time. Inclusive growth for each and every community in India, each and every aspects of occupation in India, and of course, overall as a country. So I think there will be something that will be done, but it will be overall. Focus will be as far as consumption push is concerned with respect to semi-urban and rural India, because that's where the large part of the population is.
All right, that's a view from Gaurang Shah. Sir, always great insights from you. Thank you for joining us here on News9. But before wrapping things up, let's also look at how the markets are doing, and they are pretty much at the day's low. Nifty as we speak is hovering somewhere around the 21,368 mark. It's exactly there. It's down about 0.4% as of 10 a.m. this morning. Sensex is also down about 0.5% at 70,718 level. The broader markets now, they are seeing some bit of a divergent movement from the headliners. The mid-cap index is up 0.1%. and it's above the 47,400 mark, near the day's high. The small cap index, that's the strongest segment of the market so far between the large cap, small cap and mid cap. It's up about 0.5% above the 15,400 mark. India VIX, that has slipped below 15 levels, but it's still elevated for the day. It's up 4.08% as of 10 a.m. this morning, sitting at 14.96 levels. But with that, it's a wrap on this edition of First Take, but stay tuned with us as we'll be right back with Business Plus.
तो जब हम करेंगे तो पता लग ही जाएगा. सलमान खान का करेंगे, मारेंगे यहीं जोधपुर में मारेंगे तो पता लग जाएगा.
This is someone who is sitting inside our jails and is still very